Hello, welcome to your daily outlook for gold. The daily candle we pictured this morning when we saw that nasty range and a heavy area of resistance here, this area. Basically the 1680, the key level here is 1680. Plenty of areas of rejections on dailies here, and it's pretty tough to say we're gonna have a plain and simple continuation to the upside, or price will start just ranging in here, which is dangerous. Tomorrow, election date for the United States Congress. So be careful that where you plan your trades for tomorrow, because you may see some sort of crazy moves either direction, and the moves can be short-lived. So be really careful. Every time that we have election, price will behave quite aggressive at some point. So be really careful. Trade with the extreme cautious tomorrow. What happened here? The daily is giving me a plain and simple idea. If it wasn't because of the elections tomorrow, I would say this is looking like a plain and simple reaction, kind of the candle that we wanted to see today as a accumulation candle. So the safest option is looking for continuation to the upside, because the previous weekly and the previous daily closed heavy bullish. Got the weekly here. Heavy weekly candle rejecting previous areas of rejection, closing like a champion here. It's just a matter of time until we see a break, a consistent break outside this area. To the left-hand side, what makes this trade really dangerous is because this area was a previous area of a strong support. So the same may happen here. The one and single thing that is giving me the idea that we're heading north is because these rejections here are quite aggressive. This is the third time that price was trying to break those lows right there, and this is your yearly low. So be really careful here. Planning way ahead of time is dangerous in these specific areas, because there's plenty of reactions there on dailies, and you can see the weekly here rejecting heavily, engulfing all these candle here. But we cannot just base our analysis and plan long-term buys in here, because we are basically trading at that specific area of a strong resistance on the dailies. We are a scalper. We can look for either direction, buy, sells, whatever is presented to us by the New York session. We'll take in consideration what we have at that point as confirmations. This morning, why wasn't really important looking for continuation to the upside? Because the previous daily closed massive bullish, and the 4-hour candle from London volume here giving you that idea. Okay, this is a decent close. So the moment price is closing outside this area, most likely will give us that continuation. It didn't happen quite easy. It didn't give us that kind of a steady move, at least to the 1685, which is the target that we wanted to see. When you pull up the 4-hour candles here, you know that previous areas of reactions are in this area. So you need to be really careful. Having a 4-hour candle body tomorrow, tonight, London session, a body of the candle on the 4-hour closing outside this area will be a beautiful continuation, in my opinion. And the next target that I have here as for the current weekly candle, one that I want to see getting hit is the 1700. Are we gonna have enough volume tonight, tomorrow with election day? Are we gonna manage to break those 1680s, or have at least a 15-minute candle body closing outside the 1680 overnight with Eastern session or London session, whatever the session that is giving you a break outside this area and a close outside? What you need to understand is this. For example, if we have a body of the candle that can manage in the 15 minutes to close bullish outside this area, the next candle pullback is okay, but that pullback needs to respect the low of this candle here, and breaking the high of the resistant candle, the breakout candle there at the resistance, you can start looking for that continuation. Just be really careful what may happen in these specific areas of reaction if you're not getting any breakout, and then the next candle just plain and simple engulfing that breakout candle, closing like a bearish candle there. That's basically the most dangerous move that can happen overnight. Having a beautiful candle closing outside the 1680, and all of a sudden the next candle, let's say as a bearish candle, breaking the high first, inducing you to go long, and all of a sudden that candle closing below that resistance again on 15 minutes. I'm talking about 15-minute candles here. That's basically the most dangerous one to consider. But the breakout to the upside may happen overnight. Now, we are trading in a massive range. When you pull up the 4-hour candles here, This is a no-brainer. This is a massive area of range. All this area here, this is a massive area of range. It's roughly 200 pips, the one that you have here. Now, the ability as a trader comes in play when you see, for example, a candle that can give you in a 4-hour candle, right, closing outside this area, the same that I'm picturing on the 15 minutes. I wanna see a 4-hour candle body closing outside those previous nasty rejections in here. And the moment you have something like that closing outside this area, maybe London pullback, deep pullback there, or pre-New York, and the moment price is breaking the high of whatever London can create, that basically the trade that I want to take tomorrow, basically trading outside the 1682 toward the 1690, roughly 80 pips in there. This area here, previous area of rejection, previous areas of contention here, and previous areas of liquidity. So be aware that if you don't have a steady move, then this is the zone that you need to be cashing out your position, 1690 tomorrow. In the lower time frame structure here, what is the maximum for those moves to the upside? Because at this point, remember, the bigger picture by far is still looking heavy bearish. There's no, this is a no-brainer. The moves to the upside, every time that gold is being trying to make a move to the upside, is getting rejection. You can see the previous reaction on the first week of October there. What happened on the first week of October? A heavy move to the upside. What happened on Friday? Heavy move in the first week of November, and first week of November. Boom, to the upside we go. Now, may happen that it can give you the same that happened on the first week of October there. A plain and simple heavy move to the upside and then rejection, complete rejection. But I have plenty of contention areas here, and the most consistent area of support in this specific area is this area. The 1660 is one of the strongest areas of contention as a form of support. I don't want to be playing the odds, trading long term in this area here when I have a previous area of range on the 4 hours. I don't want to be playing long term. Why? Because price, yes, can give me a break, and come back to this area and reject, give me rejections from there. Overall, I can play the range from the bottom of this area here or from the top of this area if I have confirmations in the lower time frames based on what I can see here. I may consider to not counter trend, but to look for continuation and to play the range like continuation overall, because the bigger picture so far, this is the bigger picture, a continuation to the upside. So you never know if this is just plain and simple pullback before getting another move to the downside, a heavy one. What is the heaviest one? Well, below the 1660, but we don't have that information yet. CPI is coming clutch on Wednesday, so let's pay attention what may happen with CPI, because if someone is gonna give us a nasty move this week, other than the election day, is the CPI. And it's quite dangerous to say where are we heading with CPI, because the reactions are happening here from the lows of the year. It's the third time that it's been happening. So I don't want to plan way too much ahead of time in here with the CPI news. We will have more information depending on how the daily candle close tomorrow. But I don't want to plan based on the news, based on CPI. I don't want to plan too much in this. Why? Because if for any reason gold gives me a close outside the 80 here, and gold decide to trade above the 1700s by CPI, yes, CPI may give us a pullback here, right? Let's picture this scenario here. This is planning way ahead of time. This is a massive range, 200 pip range. What happened if tomorrow we have a bullish, we start to get a bullish run in here, like price going to the upside, whatever, and we get to the point of trading at the 1700, basically having these specific areas of reaction acting as your support. A fake move with CPI can happen to retest this previous area of resistance here, the heaviest one in this area, the 1680s. But if price doesn't give us a close inside this area, it's a no to look for continuation to the downside on CPI or wherever is happening in the market. Now, the main idea will be, how can we look for that continuation to the upside, at least for the rest of the month, at least to retest the 1730s. When you pull up the dailies here, still, the previous and the one that we can consider the secondary structure based on dailies here, I really love this area. I would love to see price pushing, and doesn't matter what happened later on this month or this year. I would love to see a push on gold trading above the 1730s, and at that point, this is my kind of the target for the rest of the year, the 1800. May sound crazy because everything is looking like a heavy move to the downside, and gold is being just taking those heavy moves to the downside, and then start rallying a little bit, and then the whole rally is getting corrected with the fundamentals. So if a fundamental will have a crazy correction in price to the downside, it's gonna be the CPI, in my opinion. But we still have a lot of time to plan for those moves on CPI. So be careful, for this, since this is a daily outlook, this is your range. The lower time frame structure here, right? The one that we talked about this morning is how the COMEX, the commodity exchange open, did that drop to grab liquidity. Since then, this liquidity is still being respected. Yes, we got a retest, but price hasn't been able to break below that the New York session low. This was the New York session low. COMEX opening, crazy one, heavy move to the downside, and all of a sudden, this candle here getting entire correction in pricing here, and giving you that idea, okay, this is a fake out. I need to trade away from this specific reaction area for a possible continuation to the upside. That was the move that we managed to get in this morning. So, that's kind of the safest zone, I would say. Something that can overnight come back to this area for the third time in a row and can break and close below this area and a 15-minute candle here, you still have a lot of things to plan in here. Why? Because this is a complete mess. This area here is a complete mess as well. So I don't have any business trading from this area to this area. I'd rather sit on my hands and wait until I have something closing below this area, pull back, and at the break of that area, I can target what this morning was looking like a fake out and this specific reaction. But the odds are overnight, if we come back, if we're not going to have a continuation to the upside, because the 1680 is a strong zone, the one that makes more sense is having, for example, a break below this area here, right? A break below this area, candles closing like this, and then maybe a pull push trying to retest these areas of resistance. If we come back for any reason 2 times in a row or 3 times in a row overnight to this area here, most likely this whole move can happen to the downside. This is thanks to the heavy area of resistance that we have at the 1680s. Other than that, I don't wanna be looking for continuation for those moves to the downside if I don't have at least 2 4-hour candles that is giving me the confirmation that resistance has been established and basically trading below this area. If that's the case, then yeah, this is most likely is not gonna become the fake out that we've been looking for, trading away from this fake out. And most likely we're gonna have a plain and simple continuation to the downside. The bottom of the range, remember this, the bottom of the range to the downside is the 1660s. So you can play, you can play inside the range with confirmations, whatever. You can play toward this area here. You can look for those moves to the downside. The one that makes it a little bit dangerous, this move, is because we have, like I said, we have elections tomorrow. So you never know if it's gonna be a drop and then a whole liquidity from the downside, a correction, and going back to trade inside that range. The moves can be short-lived tomorrow. Be really careful with it. The picture that makes more sense for me based on the weekly, how the weekly candle close, and how the daily close on Friday, for me, the deepest here is, like I said on the IG live yesterday, 1670. This is my safe zone to look for continuation to the upside. That 70 there. This morning, basically with London, gave us that nice fake out. So I need to understand that this area here can be my contention area, and price, yes, price can give me a fake out, can be done in this specific area, closing below this area and not giving me that continuation. The fake out can be done and can be spotted ASAP. Before anything can happen, you will notice the fake out. How? When the candle, right? When the candle is breaking, this is your previous support. This is the stuff that we talked this morning. We were talking this morning. This closing, quite nice, beautiful, but you have previous reaction here. You had a previous reaction, and look at the closing of this candle here. Heavy move to the downside, and all of a sudden that candle, no bottom wick, bullish pressure is there. It's okay to have a retest to the support candle, And this breaking this high over here makes it quite easy to understand that this price is rejecting that area and closing inside that 70 again. This is a fake out, and you can easily look for that kind of a continuation, at least to retest this resistance and see what's going to happen there. Outside this resistance, it's just a bonus going to retest the opening of the previous daily candle. Why? Because at that point, this was your session high. Remember the gap that we got, yesterday, basically at market opening on Sunday, there was a gap in here. So it was a complete retest to that area, and prices started just to range because, it's getting ready, in my opinion, it's getting ready for election day and for the CPIs. So CPI is the one that can give me either direction. In tomorrow election, let's say that like the candle that we pictured this morning, a candle on the daily closing like a rejection, right? What may happen overnight? What may happen overnight here? That you're gonna have a plain and simple pullback, something like this. For example, this is kind of the daily candle that I want to picture. Pullback. It's okay to have a pullback to the 1670 there. Another one fake out from there, and maybe price pulling liquidity from there. If this is the case tomorrow, New York session, and you have, remember, 50-minute candles during London, or a 4-hour candle closing with London volume tomorrow, 5 a.m. Eastern Standard Time, at the break of that high is a no-brainer. You can easily target these previous areas of support in here, and you may have, a beautiful move to the 1690s there. But be careful with it, because like I said, the election is the one that can give us crazy moves either direction. So don't get caught in the hype of just holding positions. If you can reduce your risk tomorrow, reduce your risk by half, I will say, and let market settle for a little bit. If you see crazy stuff going on, just let the market chill a little bit and before considering any entry. Remember, it's mandatory. This is your session low for New York today. So it's mandatory that we still need to trade away from this rejection. If price comes back and close below this rejection, most likely will give you that move to the downside there. And this is kind of the last frontier. If price gives you a 4-hour candle bearish, close below this area, then it's a must to look for that continuation to the 1660. Other than that, be really careful with it. I don't like trading, below this area in this area here. It's too much of a headache. May not happen. Just a plain and simple drop may give you just plain and simple drop. Then price closing back in the range and just teasing you to take either position, upside or downside, and it's not gonna happen so easily until you have at least. Remember, at least 2 4-hour candles here that can give you the confirmation. So far, the most dangerous candle here is this one. This candle here, this is a rangy candle. This is your session low from New York, but this is a rangy candle. Until price close below this area, then you have the confirmation that resistance has been established, and you may look for that continuation. Other than that, this area here can be the headache that you're gonna have overnight. Be careful with it. I have these alerts. Hopefully, if overnight these alerts are getting triggered, I'm gonna get the notification, and I will try to look for something like this. Remember, Sona is gonna be hosting the London streaming tonight, and go there and share ideas, do your thing. The safest idea at this point is looking for pullbacks, fake outs from the downside, and trade to the upside, because the previous weekly gave you that idea. This previous weekly candle is giving you that idea. Look for continuation above the current weekly high, which is roughly the 1682. That's gonna be kind of the idea for that continuation to the upside. Hopefully we get steady moves overnight or even tomorrow New Year session, but I have my doubts about it because of the election day. Other than that, maybe that we have steady moves during the day, and then overnight, when all the counting start, they start counting the votes on tomorrow, then we may see some sort of craziness here going on, like a lot of volatility getting hitting the markets there. So be careful with it. 15 minutes is a must to trade away from this area. Closing outside this area, a 50-minute candle, not giving you a fake out, you can look for that 1690 overall. That's gonna be the next target here to the upside for the next daily candle. But remember, this 1680 here is a strong area. Don't forget that, please. Don't forget this area here, strong area of resistance. So if you're gonna play the odds, if you see fake out coming from this area, play the range. If you see a fake out coming from these areas here from the 70, play the range. and do whatever this kind of the same that this candle did, you can kind of play the range, but be really careful when you trade in the range. Those moves can be, you know, short-lived, and you may get stuck in a crazy range, and it's not safe to trade like that. So be really careful with it. See you guys tomorrow for another wonderful streaming at New Year's session. Take care.